Hello everyone, welcome to my channel. In this video, I will try to explain the unit number 1 very shortly. So you can call it a revision video of unit 1. So let me start. This entire unit is divided in two different categories. The first category, in which we have theoretical points, meaning, scope, functions, objectives of financial management, and role of finance manager in 21st century. And the second part is time value of money. So first, let me explain the first part of unit 1. In the first part, we have financial management, theoretical point. So financial management is a combination of two words, finance and management. Here, finance means money, fund, capital, currency, coin, everything. And management means set of activities starting from planning to end with the controlling. So here, financial management, shortly, generally, we can say that management of money, planning of money, controlling of money. Here, money means finance. So let me explain both the words in detail. Here, finance, as I told you that finance means a capital investment fund, money, currency, coin, and it is lifeblood for the business. Meaning of finance. Finance may be defined as art and science of managing the money. Here, finance means management of money. Please remember this word. Finance means management of money. Next definition is not important. Let me go for the next slide. Here, types of finance. Generally, we have two types of finance, public finance and private finance. Public finance means a money fund available with the public institutes like as state governments, central governments, local governments. Private finance means finance available with you, with me, and some business corporates. Again, private finance is categorized in two different categories, personal finance and business finance. Personal finance means money with you and me, and business finance means money invested to start a business, to operate the business. Coming to the next one, the most important for mid examination, the concept of financial management. Okay, your first definition is given by Solomon. According to him, financial management concerned with the efficient use of important economic resources, namely capital funds. I can simply say that financial management means efficient use of capital funds. And second definition, most popular definition, please remember the second definition, and that given by F.C. Cushion. According to him, financial management deal with procurement of funds. It means from where companies get the money and their effective utilization in the business. Okay, so here two important aspects are there: procurement of funds, where we can get the money, where from where companies getting the money, and their effective utilization means where we are spending the money. These two definitions are important. Please remember any one definition for exam purpose. Next, coming to the next one. Okay, these definitions I am skipping. Now the next and most important questions from unit number 1. Scope of financial management, or three important decisions of financial management: investment decision, financing decision, and dividend decision. Here, investment decisions means where we can invest our money. First of all, you need to define your business. Okay, as I have explained during the sessions that I want to start my own business, my food business. So I need to define my business. I need to develop a plan. Okay, how I can start and what are the things I required. We have taken example that we required a place, we required machineries, we required men, money. Then after I invest my money in a buildings, in a shops, in machineries, in mains. So this is how we can say that it is related to investment of funds in a various aspect of the business. And technically it is known as capital budgeting. And practically we are doing the practical questions of this investment decisions in the unit number 3. Now second decision is financing decisions. In a financing decisions, we have three criteria: sources of finance, from where we can get the monies, okay, and that is uh, equity share, preference shares, debt capital, and internal sources. Cost of finance, cost of equity capital, cost of preference capital, cost of debentures, and cost of loans. And third one, financing means mix debt equity ratio: 50% debt, 50% equity, 60% equity, 40% debt. That is again the part of financing decisions. So in financing decision, we have three criteria: sources of finance, cost of finance, and financing mix. Third one, dividend decision. Okay, it's related to declaration of dividends, how companies are paying the dividends, payment of dividend in terms of case, in terms of check, in terms of stock, in terms of other forms of dividend. Okay, or company go for the reinvestment of profit in the business for growth and expansion, and how companies are distributing the dividend. They are regularly distributing the dividend. They are regularly distributing the dividend, but the dividend percentage, dividend amount is not same. So dividend policies, payment of dividend, and reinvestment of profit, these three are the important criteria of dividend decision. Now in modern financial management, we have fourth decision, and that decision is called working capital management. And traditionally, we have only three: investment, finance, and dividend. But if somebody asks about the modern financial management, there are four decisions: investment, financing, dividend, and working capital. Here, working capital means to managing the day-to-day financial requirement of the company. Mainly, it's deal with the current assets and current liabilities. Now, moving for the next one, the next topic that we have, the next question that we have, that is objectives of financial management. Generally, we have two objectives: profit maximization and wealth maximization. All the companies are always trying to get the maximum profit by increasing the sales, by increasing the selling price, by increasing the number of customers, by giving the discounts, by giving various offers, by doing the publicities, advertising. They do all the activities to increase the profit, and not only to increase the profit, to maintain the same amount of profit every year. So each and every company started to earn a profit, and they always try to get a maximum profit. But this maximization of profit having some limitations. Why? Because because it's a narrow concept. We are always thinking about only profit. We are not thinking about the taste and preference of the company. We are not thinking about the risk. We are not thinking about the time value of monies. We are not thinking about the future aspect. Okay. So to remove these limitations, the new concept came in the picture, and that is wealth maximization. Your wealth maximization means maximizing the present value, sorry, a net present value or a wealth of the equity shareholders. Here equity shareholders means owners of the company. So wealth maximization means maximizing the wealth of the owners, wealth of the equity shareholders. And to maximize this shareholders' wealth, we have two ways. Number one, by declaring the dividend. As a company declares the dividend, shareholders get the dividend, they get the amount, they get the money, they can enjoy, they can reinvest, and they can get more benefits. And second is capital gain. Okay, capital gain means now company not declaring the dividend, but it reinvesting the profit in the business for growth and expansion. So after a few years, the share price of the company will automatically increase, and as the share price increase, the shareholders will automatically get the more amount, more value. We have taken an example of Tata Motors share price in 2014 and 2021. Okay, so this is about wealth maximization and profit maximizations. Now coming to the next one. The next important question from the unit number one is financial management and other subjects and other disciplines. So here financial management and economics, financial management and accounting, financial management and mathematics, financial management and production management, financial management and marketing, and financial management and human resource. All these subjects have direct, indirect connection with the financial management. You need to write any four disciplines in the answer if the question having 8 marks. Now the important question and fourth question from the unit number one: role of finance manager. Traditionally, financial manager role is limited to only controller. We need to think about only two aspects. One is from where company get the money and where we are utilizing that money. Okay, he is just a controller of the money, of the finance. But in modern financial management, he is a facilitator. Okay, he is a facilitator, and with this too, procurement of funding and utilization of fund. With this too, he need to or she need to do this all the roles. He need to play this all the roles. Number one, provision of capitals. Okay, from where company get the provision capital. Investment relations, he need to maintain she need to maintain the relation with the investors. Okay, short term finance, also he or she is responsible for managing a short term finance for day to day operations. Banking and custodies, all the activities related to banking and custody he need to do. Credit and collections, okay, he decide the credit time, credit policies, and he is taking actions for the collection of money from the customers. Insurance, life, fire insurance or marine insurance or goods insurance. Investment, surplus amount, if company have surplus amount, then company go for the investment. That investment decision is again taken by the finance manager. Planning for controlling, okay, controlling here means controlling of operations. Reporting and interpreting, every time he need to report to the top management about the work done by the finance department. Evaluating and consulting with the other segments, with the other departments. He need to worry about the tax administration, means tax planning. He need to provide some reports and statement to the government offices as per the requirement of the government. Also play a role of protecting the assets of the company. Okay, economic appraisals and managing the funds, measuring the returns, cost control, price setting, forecasting of profit, forecasting of cash flows. These all are the role of the finance manager. If the question asks, you need to write any 8 role of the finance manager. So up to this, we have discussed the concept of finance, concept of financial management, uh, scope of financial management, or three important decisions, objectives of financial management, and role of finance manager. So these are the important aspect from the unit 1, specifically from part 1. Now we are moving for the part 2. In the part 2, we have time value of money. So let me share that screen also. In time value of money, we have different calculations and different values. Specifically, we have two types of calculations: compounding calculation and discounting calculation. Compounding is also known as future value, discounting is also known as present value. So, time value of money contain two different aspects. Okay? Future value and present value. Let me explain future value and present value both in detail. Here, future value means it shows how much a sum money becomes at a some future period. Suppose I have invested 10,000 rupees in a bank as a bank fixed deposit. So how many rupees I will get after 5 years? That amount is called as future value. That amount is called as compounded value. In short, whatever the money you will receive in the future, that future money is known as future value. Okay, and that future value is calculated based on the compounding interest. This entire calculation is based on compounding interest. That's why it is sometimes known as compounded value. And present value is exact opposite to future value. The present value shows the today value of future money that you will receive in the future. Suppose I will tell you that, or I am telling you that I will give you a 50,000 rupees in 2025. So what will be the value of 50,000 rupees right now that you will receive in 2025? That is called as present value. So present value represent the value of the money that you will receive in a future. And for the calculation of future value, we are using a discounting rate. Okay, we are using discounting rate. That's why it is also known as discounted value. This is also known as discounting value. Okay, so these are the methods that we have understood in the second part of unit 1. Future value of single amount, present value of single amount, future value of annuity, present value of annuity, and present value of infinite case inflow, and entire compounding and discounting. Out of the six, any one or two will be there in mid one, definitely 100%. Okay, it's having minimum 4 and maximum 8 marks. Same applicable to final examination also. Minimum 2 method will be there. So please be here. Okay, first we go for the future value of single amount. Okay, already we have done this all the calculations in Google Sheet. So let me share that Google Sheet. So we will get the clear idea. Starting from the question number 1. Okay, this is the formula to calculate the future value of single amount. Here FVN is equal to PV plus 1 plus R raised to N. FV stand for future value, PV stand for future present value, 1 R stand for rate of interest, N stand for number of years. We have done the first practical question, okay? That you have deposited 10,000 rupees in a fixed deposit, 5% interest for 3 years. Which amount you will get after 3 years? So we have written the formula here, okay? FVN is equal to PV in bracket 1 plus R is to N. So here future value we need to find present value. The amount we have invested 10,000, 1 plus R rate of interest is 5. Here 5% means 0.05 and rest to number of years 3. You will get 11,576.25 rupees after 3 years. This is the first type of practical question. Next practical question is present value of future amount or a single amount. One more thing here. One more thing here. In some of books, in some of exam, you may find that future value is given to you, P is not given to you. In some of practical, you will find all the things are given to you, R is not given to you, N is not given to you. You need to use the same formula, and by using the same formula, you need to put the values available with the U. Automatically, you will find the missing values, whether it is FVN, whether it is PV, or whether it is R, whether it is N. So अगर कोई भी 3 या वैल्यू दी है तो फोर्थ वैल्यू आपको ऑटोमेटिकली मिल जाएगी. Okay, then after we have understand the rule of 72, rule of 72. Okay, if we want to calculate the doubling period, that in how many years your amount will be double, you need to divide the percentage by sorry, you need to divide a 72 by percentage rate of interest. Then after we have done the rule of 69, okay, whatever, if you want to find the doubling amount, 0.35 plus 69 upon interest rate, you will find the double amount, number of years required to double the amount. Now the next important question, these rules are not important, so good, don't worry about it. The first practical question, future value of single amount. Now the second type of practical question, present value of single amount. Okay, and for that we are using this formula. FVN is equal to in bracket 1 upon 1 plus R is 12. Reverse to previous question. Question is look like this. Here the present value is missing, you need to find the present value. Future value FVN 1000 is given to you, 6 years and 10%. Put the values here. FVN is equal to 1000, R is equal to 10%, and N is equal to 6. So formula is very simple. PVN is equal to FVN in bracket 1 upon 1 plus R is 2 N. Then after we have discussed the next practical question in which future value of annuity is there. Here annuity means the constant case inflow at a regular interval, like as a premium of the life insurance, premium of your motor car loan, okay, premium of your home loan. So these are the regular payments that you need to do. So annuity means a regular payment, regular stream of constant case flow. This is important for your 1 mark questions. If the case flow occur at the end of each period, it is called as ordinary annuity. At the end of the year, if the case outflow occur or case inflow occur, it is known as ordinary annuity or deferred annuity. But when case flow occur in the beginning of the period, it is known as annuity due. Please remember these two words. Maybe ask in 1 mark question. Ordinary annuity and annuity due. Then after, next we have discussed this future value of an annuity. The formula is FVN is equal to A in a bracket 1 plus R is 2 n minus 1 bracket over entire bracket is divided by R. Okay. Now please remember here in a previous questions, if you look at to here, in a previous questions, when the future value of single amount is there, we are using N, only FVN. But when the annuity is there, we will use FVAN. Okay, FVAN. Here. A stand for annuity. How to identify the question of like this? Whenever in a practical question, if you find the word annually, annual or annually like this, you deposit rupees 1000 annually. Whenever you will find the word annually and compounding interest, it is a question of future value of annuity. You need to use this formula. Okay, rest of calculations are remain same. Your A means 1000, N means 5, R means 10. Put these values in the formula, you will get the answer. Now coming to the next one, future value, present value of an annuity, it is revert to the future value. So whenever in a practical question, you will find annuity, annually or annual plus discounting factor or a discounting rate. At that time, this is question of present value of an annuity. So I repeat, when only compounding interest word is there, future value of single amount, when only discounting word is there, discounting rate is there, present value of single amount, when there is annually plus compounding, future value of annuity, when there is annually plus discounting rate, present value of annuity. So this four. And moving to the next one, present value of perpetuity, it means infinite time. Okay, this is not important for all of you, leave it. Now this is important for all of you, please be focused, be here, because your entire compounding and discounting means calculating the future value and present value when the interest is calculated in between the year. Entire discounting and compounding means the calculation is in between the year. Formula is FVN for compounding. Formula is FVN is equal to PV 1 plus in bracket R upon M bracket over raised to M into N. Okay, we have done this practical question with this. Okay, here, please be here and be very, very careful here. Whenever the word like this, semi-annually, quarterly, monthly, half yearly, this type of words are there, and compounding interest, these two words are there, you need to use this one. Fn is equal to P in bracket 1 plus R upon M and in bracket over raised to M into N. Here M stands for number of months. When the interest is calculated here, semi-annually means 6 months, half-yearly means 6 months, quarterly means 3 months, monthly means 1 month. So here monthly means M is equal to 1, quarterly means M is equal to 3, semi-annually M is equal to 2, half-yearly M is equal to 2. N means number of years. Okay, and same applicable to discounting, same applicable to entire discounting. Whenever in a practical question you will find discounting rate or discounting what plus quarterly, monthly, semi-annually or half-yearly, you need to use this formula. PVN is equal to FVN in bracket 1 divided by 1 plus R is 1 plus R upon M bracket over raised to M into N. So with this our second part is over. So in second part we have 6 type of different practical questions. Please remember future value of single amount, present value of single amount, future value of annuity, present value of annuity, entire compounding, entire discounting. Out of these 6, any 2 will be there in mid one in final examination. Definitely. Okay, so please do at least one practical question from each method. This is, and one more instruction about the time value of money. Please carry the hard copy of present value and future value tables with you during the examination. Okay, if the supervisor is allowed to bring your own copy, go with it. If he or she restrict you to use that, please ask to provide the same table to you in during the examination. So I request all of you, please take a printout of the future value and present value tables. Okay. So in this video, we have covered the concept of finance, concept of financial management, objective of financial management, important decisions of financial management, role of finance manager, and time value of money. In time value of money, we have covered 6 different values. Thank you so much for watching this video, and wish you all the best. Bye bye everyone. Take care.